Now, we all know that the problems that we're facing with the U.S. economy are large, but what to do about it and what can you do with your money given all of these headwinds? We put together a Taking Stock think tank in order to address some of these issues. We have Danny Blanchflower, professor of economics at Dartmouth College and a Bloomberg contributing editor. Danny is also a former member of Bank of England's Monetary Policy Committee. He can tell us the way central bankers think. We have Dan Wiener. He's the co-founder, chairman, and chief executive of Advisor Investments. He's also the editor of the monthly newsletter, The Independent Advisor for Vanguard Investors, and Bloomberg View columnist Jonathan Weil. Good to all have you with us. Danny Blanchflower, take the jobless numbers that came out yesterday, below 400,000. Marry that up with the durable goods orders. Are we going into a recession in the United States?
Well, we're certainly slowing. I mean, I think a technical definition of recession, a couple of quarters of negative growth, I don't think that's really the issue. We're in very, very slow growth. We may well get one or two negative quarters, but the problem is that we're not growing enough to get those unemployment numbers down, and that's hitting incomes and that's hitting spend. So, it's a big problem. And the other thing is that Europe is probably actually going to go into recession, as probably the UK is. So in that environment, that's really a very bad headwind.
Dan Wiener, as Danny Blanchflower says, wages, that's going to be a problem for U.S. workers. Also, you're not going to see spending by U.S. consumers. What does this mean for
actually,
equity
you
investors?
are seeing some spending. It was funny that Jeff before said that folks aren't buying digital cameras. I bought 2 this week. But
you're doing your bit for the economy.
I am doing my bit for the economy. But, I think that, yes, the fundamentals are actually a lot better than the sentiment. And as Danny already said, we're slowing, but we are still growing. If you look at, for instance, rail traffic.
Right.
Rail traffic is at an all-time high.
Why? Because of inventory rebuilds?
No, they're moving industrial product into, and around the country. This is industrial materials that are moved around by rail at an all-time high. Shipping containers, our exports are still very strong out of Long Beach and out of L.A., where we're seeing weakness, of course, is in air freight. FedEx told us that a couple of weeks ago. But, in terms of where investors can go, there are a couple of great places where you can go in the market right now. Large cap, high quality stocks that are paying dividends. Deborah just told us the yield on the 10-year bond is at 190 or 191. That's nothing. You can get that on a high quality stock that also is potentially going to give you some capital gains. And we've seen a big widening in the yield spreads in the high yield market. And there's some real opportunity in there. And I would just also mention that you had Mr. Buffett on earlier today, and he spent, what, $4 billion on stocks this month?
He did. We're going to talk a little bit more about that. I want to bring you into this, Jonathan Weil. What about the banking system right now? We talk about banking as a transmission mechanism for fiscal and monetary policy. What's the banking system like in the U.S.?
This is a sword hanging over our heads right now, and because of it, I'm a bit more skeptical and cautious than our other guests. The problems going on in Europe right now with their banking system, which seems to be as bad as solvent as Greece is on any given day, those will hit here if and when Greece and other countries default on their debt. We start seeing major troubles, and it will wash on the shores here. And then so the economy seems to be kind of treading water, humming along a bit, but there's this huge downside hammer hanging over us, much like going into September of 2008, where you start to see 1 or 2 major financial institutions fail in this country, and then you hit the reset button all over again. And when we start looking at some of the largest banks, where they're finishing the third quarter, or their balance sheets are going to look like when they report earnings. I mean, just as an example, among the mid-sized players, Regions Financial is trading for about 30% of book value, trades for less than the goodwill on its books. A lot of write-downs there and other places to come. Bank of America looks terrible right now. Morgan Stanley looks terrible. And we don't know where the next shoe to drop is with our own financial institutions, but we know with banking-driven recessions that they can hit very hard very quickly.
We'll call it the sword of Damocles. That's got a nice European ring to it. Dan Wiener, how much money have you got under management now?
We're managing about $2 billion.
About $2 billion. All right, so people turning to you to give them some counsel, some direction for what to do. Do you find that people are fearful about investing in stocks now?
No, what we find is that they are kind of rational about the fact that the markets will do what they will do over short periods of time. You begin to look, though, at the numbers, and you know the possibility of losing money if you're a long-term investor shrinks rapidly as long as you stay in the market. You know, we have sort of a saying that it's time in the market, not market timing, that will make you money. I know there's a lot of traders who'd like to trade out now, but how many of them are going to get back in before the next increase? So what we're doing instead of trying to time the market is we're trying to move into higher quality companies. We're trying to find yield where we think we can get very good yield on a risk-return basis. I mean, 2 months ago, you know, the spread on high-yield bonds was a heck of a lot smaller than it is today. We moved in a couple weeks ago. We're looking for places where we can add a little value, and obviously for our clients who are more risk-averse, we bring down the risk in the entire portfolio.
Danny Blanchflower, Dan Wiener was talking about the long term, taking the long view. What's your view of Europe and the UK? You say recession, it's looming.
Well, I think it is looming. I've said for a very long time that rates are going to have to stay very, very low for a long time. And actually, the yield curve is going there. I mean, we're looking in the US and the UK. The yield curve says rates won't hit 1% for 5 years. So that really suggests that growth is a problem. And I think what we've actually seen, and I agree with Jonathan about it, it's really very bad from Europe. What we've seen is fiscal and monetary tightening done too early is decimating growth around the world. And unless we see big U-turns, then we're going to see very, very difficult times. And and I think the worst of all of the ECB raised rates twice. They need to cut those rates very soon. The Bank of England is going to go into QE. The Fed's going to go into QE. And I think all this stuff which says bankers can't do anything strikes like the 30s. That was what they said in the 30s. Wasn't true. So I worry about the long term, but I worry a lot. Jonathan, I agree with completely. I worry about major macro errors. And then the problem is it's downside for everybody.
Jonathan Weil, is it that bankers can't do anything, meaning central bankers, or is it just that they can't speak in a way that normal people understand their language? I mean, you've written a column basically highlighting that there's a whole nother language out there, particularly when it concerns Eurozone.
Yeah, like finance ministry. It's the place of worship where people in government go to pray for bailouts and panaceas and economic miracles. The language has really started to bother me, especially the past couple weeks.
Deny and dither.
Yeah, I mean, everyone is talking now, the buzzwords now, we have to erect firewalls to prevent contagion, and nobody has any idea what they're talking about, including the people who are saying these things.
But it sounds good.
It sounds terrible.
Particularly in French.
It sounds horrible, because then you realize that they have no idea what they're doing, and there's been this tendency over the past year and a half, especially in Europe, but it's not limited to, we have this problem here too, for finance officials and government to just lie about what the prospects for policy are. Nobody has any idea what anyone's going to pull next.
Well, we're going to continue talking about this next. Danny Blanchflower, if you had any money, what would you be doing with it?
Well, obviously, if I had any money, right now. I think you obviously, I mean, I've heard these commentaries. I think diversify is a really big story here. Long in bonds is a good place to go, but I just think you have to cover for still the cataclysm. I sat at the Bank of England and watched over several days where we were watching banks crashing, and I think the incompetence of the European leaders, central bankers, has brought it back to play where we were in 2008. So you have to cover a cataclysmic downside, I think. I've been saying it for quite some time. If you think of an organization that has 17 different countries, many of them speaking different languages, and they have to get this thing organized, they can't act fast enough. That's the problem. Europe is our big downside risk.
If Danny Blanchflower had some money, what would you advise him to do with it?
Well, if he had some money, I would tell him to be looking around for, I mean, but he's an academic. What can I say?
Well, it's going to depend on the pension plan. I mean, they've got to invest their money too.
He sounds like a very young guy. So I would say, Danny, unless you're willing to try and time this market, I think you look for places where there are good values, relative values.
U.S. companies that pay dividends?
Large U.S. companies that pay dividends are paying great yields. As I said, the yield spread in the high yield market. Look, I would look at long muni bonds. Meredith Whitney, who said that the municipal bond market was going to fall apart. What have we had? 1, 2 bankruptcies this year, where it's the end of September.
All right, so muni bonds and high-grade corporates?
High-yield corporates. But I would go on the, you know, it's a misnomer a little bit, but I would go on the quality junk bond side as opposed to the really junky junk bond side.
Well, that's right. That's right. But you're still, I mean, that may be right relatively, but it's hard to think if a cataclysm comes that even the advice that you're going to give is getting covered. I mean, that's really where we are. Bank share prices around the world have fallen by 60%. We are still in a possible time where something really terrible happens, and what you've just told me is probably not going to be insulated from that.
Jonathan Weil, bank recapitalizations, particularly in Europe. How is it possible that you always hear chief executives of banks saying, no, 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 we don't need any more capital, just at the time that their share prices are plunging?
The only way that European banks, or even the U.S. banks, right? I mean, U.S. banks are having just as much trouble raising capital and just as much in denial. But especially in Europe, the way they're the only form of recapitalization that anyone's talking about seriously at the moment is taking money from the middle class of these European countries and handing it to the banks.
Tax increases,
yeah,
like property tax increases.
Taxpayer bailouts, basically. This is the next stage that we are heading toward in Europe. And one of the things that's interesting is here, supposedly under Dodd-Frank, we're not supposed to be doing that anymore. But if you look at the prices of the big, huge, presumably too big to fill banks their bonds are trading at, the presumption still is that they would have a backstop of some kind.
Dan Wiener, you get Deutsche Bank coming out and being very successful at selling senior unsecured debt. So there's an appetite out there somewhere.
There's an appetite. We were talking during the break. The banks seem to have quite a lot of cash available because they went to the Fed this week and said, hey, we want to buy some of our shares back in. Well, my attitude is, let's send a little of that money out into the economy instead of just feathering your own nests, boosting your PEs. I mean.
What about Warren Buffett's coming out and buying shares of Berkshire Hathaway, stock repurchases, as well as other companies?
So Buffett buys a lot of shares, or intends to buy a lot of shares in Berkshire Hathaway. So in one sense, you would think that means, well, he doesn't see values in other parts of the market. But in fact, he spent $3.5 billion in August. He spent another $4 billion in September buying shares in the market. And when you think of Berkshire, yes, insurance is a very big piece of it, but he does have big, parts of Berkshire in many parts of the economy.
Sure, Procter & Gamble is a big holding. Wells Fargo is a big holding.
He owns banks. Right. He owns furniture stores, candy makers. So he's really saying there is business out there. There are some estimates that I've seen recently that third quarter GDP is actually going to be over 2%. So that we're going to see growth over 2% in the third quarter.
Danny Blanchflower, growth GDP in the United States, 2% for the third quarter?
Sounds a little high to me. I mean, I think the story we have to be aware of, think about Germany. Germany was pounding along, doing really well, and suddenly realized they were really all in this together. They're exporting to the rest of the world. The rest of the world pulls them down. Germany's now in trouble. So it may be, if there is 0.5, this will be the high point.